Hey everyone, Alan Brochstein from New Cannabis Ventures and 420 Investor. Let me wish you a happy new year. Each week in these videos, I try to quickly get you up to date with the most important cannabis news of the week. What I discuss is what's in our weekly newsletter. You can sign up for that weekly newsletter if you want to receive it by email by clicking the link that's in the description here. Also, you can just visit our website. We publish it on Sunday mornings. So this week was rather uneventful with respect to news. The price action was down, so we ended the year, global cannabis stock index was down 26%. We ended up dropping about 3.5% this week. That marked the 10th straight month of decline. So it's been pretty brutal. We got off to a great start this year, and it was all downhill after that. Every week, we publish in our newsletter the most important news of the week, and that tends to revolve around either the press releases that we run, the curated press releases, or our own proprietary content. There weren't a lot of press releases this week. Only one of them made it into the newsletter, and that was the Curaleaf acquisition. It was kind of interesting to see that deal. The company's stock trades among the most expensive, among the top 10 or so MSOs, but they don't want to use their stock. And I'm not saying I blame them necessarily, it's just an observation. They recently raised a lot of debt capital, and a big portion of that is going into this deal. The deal is to acquire 4 dispensaries. Bloom Dispensaries is the name of the company. 4 dispensaries and 2 production cultivation facilities in Arizona. They detailed the revenue as being about $66 million for this year, with EBITDA margins in excess of 40%. In fact, Boris Jordan suggested that the deal was, if you were to do that math and assume 40%, you'd come up with about 3.2 times sales and about 8 times adjusted EBITDA. But Boris Jordan, the executive chairman of Curaleaf, said it was actually closer to 6 times. It seems really cheap, I got to tell you. And that's the third deal, second large deal that Curaleaf's done in Arizona, Trike being the other large deal, not just Arizona, but that was part of it. And so I think, I'm pretty sure it was. In any event, they have another large deal pending. That was more stock-based. Trike's in Nevada. I thought it was in Arizona too. I could be wrong. So that was really the only news of the week. There was some other, there was other news. We didn't even, I'm not including the GTI pending acquisition of Leafline. They didn't disclose the details. It's not, I don't think it's that big of a deal. Like, this one was a big deal. The fact that it was large in size, 200 and some odd million, but also the fact that it was an all cash deal. And it's not all upfront cash. They are paying it out over an additional 3 years. So so that was the curated press releases. And then we also publish proprietary content each week. Thank God, or we wouldn't have had anything to put in our newsletter this week. So our proprietary content tends to be our interviews, discussions of our revenue tracker, discussions of market, individual markets, and also our month-end summary of our indices. And so what we ran this week was an interview with the new CEO of the parent company, or TPCO Holding. And Troy Datcher is new to the job. He has a very distinguished CPG background. We asked him, what's he doing to get up to speed in the cannabis industry? And I thought it was an interesting interview. The guy's really humble, and that sure came out. And I thought he did a good job of discussing how the company intends to shepherd its cash carefully, and how they've achieved their priority earlier than expected of having broad penetration into the state, either through their retail stores or delivery. So again, on these interviews, we do a write-up. It's pretty extensive, but we also include the whole audio if you want to listen to it. So that was one of the proprietary pieces that are in the newsletter. Also, I discussed the revenue tracker. Now, I have to admit, it's kind of boring right now, but I do it once a month, even if it's boring like it is now. Why is it boring? Because not a lot of companies reported in December. In these revenue tracker reports, we not only discuss some of the reports that have transpired, but we also share what the expectations are for the important ones coming up. And in January, we will have some important ones, mainly out of Canada. Now, Tilray reports in American dollars, but it's a Canadian company, and they'll be reporting. They've already scheduled their date. I believe it's January 11th. And so I shared a preview there. Now, that's a tough company to kind of talk about from a revenue standpoint because it's so diversified between alcohol, hemp food, pharmaceutical distribution, and then cannabis, which isn't even the majority. So in any event, that's one to look for. It'll be interesting. And Organogram, while not one of the very largest in Canada, it's actually moved up to top 5 market share in the adult use market. And that one will be reporting. They haven't set the date yet, but that's by mid-January as well to report their Q1. So also reporting out of Canada will be High Tide. And High Tide is also somewhat diversified now, but it's all cannabis. So they are a Canadian retailer of cannabis. They are an ancillary company. They run online ancillary, and they also provide wholesale ancillary goods, consumption goods. And then more recently, they've been building up their CBD. So I shared the expectations in that piece, for what people are expecting from them during what's their fourth quarter. So those are the reports that are ahead. It'll start to get a little bit more active, by the way, in February. Not that active. It's really in March where we'll see most of these year-end reports. And then also, so we publish 4 index reviews each month, and I got 2 of them out on Friday after the close. The first one was on the American Cannabis Operators Index, which fell about 7%. I think it was about 7%. And it ended the year down 34%. If you're paying attention, you heard me say earlier that the global cannabis stock index fell 26%. So this was actually worse. This index was worse than the more comprehensive index. And this index, as a reminder, includes not only MSOs, but also CBD companies, and those did not help. But, you can look for yourself at any sort of return performance charts or anything, and it's pretty obvious that the MSOs had a tough year. So in this piece, I talked about who were some of the better performers and who were some of the worst performers during the month. Very disparate. And also the other one we ran was on the ancillary index. That index launched in March, and it has performed substantially better than the global cannabis index since then. And I think almost every month, all of those 9 months, I think the only month where it lagged the global cannabis index was November. In December, it did a lot better. The global cannabis stock index was down 11.5%, and this one was down 7%. So it was another, I think that's the number. It was a relatively good quarter, a good month and quarter for that index, but in absolute terms, it was a disaster. Again, very different returns when you look at who did well and who did poorly. The article lists the 3 best and 3 worst of that 12 company index. 12 companies. That index will be increasing to 14, and I should have said the American Cannabis Operators Index, 2 companies are falling out, so it'll be reduced from 22 to 20. I think that's it. That's the articles we ran. So one other feature of the weekly newsletter that we've been publishing since 2015 is this is the one time where I kind of share with the general public the things I talk about all the time at 420 Investor. And so this week, look, we're heading into a new year. We've been selling off, as I mentioned, for 10 straight months. So I kind of talked about, what's it going to take to break this downward trend. And let me first say, while historically this has been a catalyst-driven market, specifically some of the big catalysts over the years that have gotten interest in the sector have been when Colorado legalized. That was a long time ago when the companies weren't very good. More recently, the 2016 elections, when California and Massachusetts were on the ballot, as well as a few others. And then the next year, what I called the Cali rally, but ahead of the California legalization, also caused a huge interest in Canadian LPs, but whatever. And then later in 2018, when Canada legalized, that was an event that that drove prices higher, drove a lot of interest in the space. Well, we had the mother of all catalysts apparently this year, and in this piece, I depicted Google Trends over time, and it just shows how much interest there was in the sector in the first part of 2021 and how it's all dissipated. Now, I think over time, as the industry matures, as the sector matures, these event-driven catalysts probably become less and less important, and the stock prices over time will tend to track the fundamentals. And I'll go on the record and say I think the fundamentals look strong and the valuations look great, but that's not often enough. It could be enough, and I would remind everybody that at the end of 2018, the Canadian stocks sold off hard, and also there were a bunch of U.S. MSOs that had just gone public: Acreage, Curaleaf, Cresco, Harvest. Trying to remember who else. There were a few earlier in the year. GTI, TrueLeaf, maybe a little earlier on TrueLeaf, but GTI and MedMen had gone public. So we had a lot of supply hit the market, and we sold off hard in the end of the year. And it even impacted stocks like GW Pharma, totally obliterated at the end of 2018. Probably didn't help that there was weakness in the overall American stock market as well. And it literally turned on a dime in 2019. Now, I wouldn't suggest to anybody that just because this happened at the end of 2018, that it'll happen at the end of 2021, but it might, and I hope it does. But what I wanted to do in this piece was talk about a few things that I think could happen in 2022 that will get people interested in the sector again. And so I'm not going to spoil it. I'll let you read the piece when it comes out tomorrow. And so with that, again, I want to wish you a happy new year. Also, as a reminder, if you enjoy these videos, this sounds a little corny, but just hit the subscribe button and you'll be notified each week, and you'll be reminded that there's a new video. And I appreciate the interest. Last week's video was my most popular in terms of viewers to date by far. And I started this in September 1st, just as a way to maybe tap into different types of people than are consuming the information I put out regularly in other ways. In other words, people that like to listen or listen and watch maybe rather than read. And so I appreciate that different people have different ways of taking in information, and started off as an experiment right after Labor Day, or maybe right before Labor Day. I think it was right before Labor Day. And I've continued to do it, and I look forward to sharing these updates with you as the year plays out. So again, you can subscribe to these videos if you want. Also, you can sign up to get our weekly newsletter at New Cannabis Ventures. And if you're really looking for the best of Alan Brochstein, consider joining 420 Investor as well. I share a lot more information there. I call it like I see it, and there's a reason why I have so many subscribers. You can take a free test drive, really. I mean, you have to pay, but 30-day money-back guarantee, so you'll get a good opportunity to see what it's all about. And if you don't like it, you can get your money back. So with that, Happy New Year. I hope it works out to be better for us who are rooting for the cannabis stocks. Take care.